Hi, I'm Andrew Goldstein. I'm the editor-in-chief of Artspace and the chief digital content officer of Phaidon and Artspace. And today, we are gathered in the middle of a historic edition of Art Basel, surrounded by $3.4 billion worth of art, all of it for sale. The world's wealthiest collectors are here. According to news reports, dealers are claiming the strongest commerce in years. Part of the reason that the demand is so high at the moment is that collectors from around the globe are looking at art not only as an object of aesthetic pleasure and contemplation, but also as a vehicle for investment, with headline-grabbing auction results providing a widespread degree of confidence that the market is going up, up, up. The market for emerging art, in particular, has reached supernova status, with speculators driven to a frenzy by the prospect of flipping the hottest art for returns up to 3,000%. Into this mix of buyers, one of the savviest and most often misunderstood group consists of individuals from the finance sector who are applying the same bottom-line-minded worldview to collecting as they do to managing their portfolios. History has shown us that the finance sector has produced some of the art's greatest patrons, from the Medici and the Kijis of the Renaissance to J.P. Morgan to modern-day collectors like Stephen Cohen. The difference between the patrons in yore and the collectors of today, however, is that the money tied up in the market is so much higher than ever before, tempting many to view collecting less as a hobby and more as a business. The fact that the art market has to date eluded the regulatory oversight that governs the stock market makes such investments even more attractive. To discuss the effects and potentials of this financialization of the art market, I'm joined by a trio of three very different experts who come from at the finance sector from different perspectives and to see this as critical to their understanding of collecting. I'm joined here with Bilge Öğüt, who is the managing director of private equity directs at London's Partners Group, and she is also a passionate collector of new media art, along with her husband, Haro Kambusyan, and in 2011 established Collectorspace in Istanbul, a nonprofit that aims to foster critical discussions on art collecting. Over here is Alain Servais, a Brussels-based financier who worked as an investment banker with Drexel Burnham Lambert and then the private bank Dewaay for 14 years before taking a more entrepreneurial route and focusing on building his collection of global art. Some of us may know him from an interview that I did on Artspace a little while ago that got quite a bit of attention for his eye-opening and unvarnished views. And then Etienne Ficheroulle was the proprietor of Etienne Ficheroulle Gallery in the early 90s, and today is a consultant and a collector. So thank you very much for joining me. I think to begin, it might be most productive to go around and to briefly describe a little bit about how you come into the finance sector and how that applies to your experience. How do you apply that experience to your interactions with the art market?
I guess for me, I actually work on a spectrum of finance, which is not considered finance. We talk about financial instruments as one thing, but they're actually very different things. And I usually invest into the end of the market, which is called private equity, meaning that none of it is publicly quoted, and none of it has a reference price per se. And I think maybe a little bit of it is that the beauty is in the eye of the beholder, in the sense that if you're especially on the venture capital side of the private equity market, you're basically funding talent. You're really trying to find the people who have an extraordinary idea. And I think from my perspective, I don't do collecting with any financial incentive in mind. I actually am perfectly happy if none of it turns into anything. But I think that the important thing for me is that being able to nurture great talent, because I have seen this in my business life in terms of how those things actually change our lives for the better. And I do certainly believe that can apply to the art world as well, that young talent that needs room to grow. I find that to be the interesting part of being part of that journey. And so that's my perspective on collecting.
Yeah. Andrew let you believe that we would speak about billions again and money, but it is no luck on this one, because the three of us are very passionate collectors, and definitely none of us is in the art for the money, despite the fact of being from the finance sector. So. And we are not here because it's easier to cheat the SEC in the art world than in Wall Street. So that's not the reason why here. I think what interesting is I was asking myself even that question. Is the fact that I've got a background in trying to analyze a certain group of potential acquisition, whether it's bonds, equities, or whatever. Whether I'm influenced by my background into the way I'm looking at those. And it's true that, thinking about it, I said to myself, yeah, it's true that in some way there are elements when I'm approaching an artist that I'm looking at. Is it something which is related to me, to my financial background, or is it something which is just something normal in the art world? And examples of things I'm looking at is, where has he been exhibiting? Who is the gallery representing him? What kind of, is it someone is producing a lot, or is what he's doing producing a lot? Who is collecting it? And it's true I had to recognize that even if I am not in the art for investment at all, the only thing I'm saying it is a devouring passion. It is even, I could even call it an addiction in many ways. So I'm only thinking about my children. Is that my children at the moment, they hate it. They said, Daddy, when you die, we're going to sell it. So I'm just thinking about them to make their life not too difficult. And so that's the only element I'm trying to make things that they will not say, oh shit, the only opportunity to get rid of that thing is to put it on the sidewalk outside of the house. So that's something I would like to avoid. So that's the only idea. But the element is just to preserve also and to pay the person for an effort as well. He got there with a good reason. So those are different elements that I take into account, but still with a passion behind.
I started as a gallery, and I participated to Art Basel 3 times in the very worst years of the market ever. It means that in 40 years, there were the worst years of the market. So I had to stop the gallery because we were not selling at all. So there was something in the market that I had missed. I had taken care of my artists, I had taken care of art, and I had no idea what the market was like. And I had to start a thorough reflection about how the market functioned. And unwillingly, I became an expert on the market. I made up an expert model, modeling all the elements that make an artist valuable or not. And then I became the head of the art department of an art leasing company, which needed me to have valuation of the works, because the banks did not want to finance things at 500,000, while it was worth only 50. So I became unwillingly an expert on the market, but I'm still a real art lover.
So I think the thing that joins all three of you is that you come from the finance sector, or you all come from at a financial perspective, not with the intention of making a ton of money off of selling the work, but in terms of investing in value. And I think that comes both from the more emerging sector, where you're investing in the potential, of these artists to really achieve something great, or in terms of finding artists whose work is going to hold value from one generation to the next. Now, I think that you're all very passionate art collectors and art lovers. I think it's undeniable that at this moment there is a sweeping tendency in the art market and the art world in general to see art as more of a financialized commodity. And I think that it's an interesting moment to look at that, and having your very esteemed background, I think is going to be a great a lens to look at that. So I think one way of entering this conversation is that while by now it's well known that collectors can make significant profits through buying and selling art, and we see this, from Phillips to Christie's to just what you see through ArtRank and the Simkowitzes of the world, that art can be flipped very quickly and very easily and very profitably. It seems that many experts are looking at it as a pursuit more akin to gambling than a sane investment that you could find through traditional markets. For instance, UBS, the investment bank that sponsors Art Basel, refuses to advise clients on investing in art because it believes that the market is too speculative and not transparent enough to really hold the weight of their counsel. So, do you agree with this assessment about investing in art as being too speculative to really be able to, hold water, or do you believe that there is room there?
I started studying the market historically. And for example, in the beginning of the 1990s, of half of the 1990s, there was a thorough university study about the link between the art market and the financial markets and the markets of bonds and stocks. And the conclusion in 1995, published by a university in Brussels, by Victor Ginsburg, was that there was absolutely no correlation between the financial market and the art market at that time. After the years 2000, if you look at the figures of how the market evolved, the correlation between the financial market and the art market is totally complete. I mean, when you had the financial crisis of 2008, started 2007, 8, and then the market exactly followed the curve of the financial crisis, which was not the case in the end of the 1980s, for example. There was a famous crash, the Black Friday in 1987, when the financial market really crashed. It was one of the very first crash in history. And there was absolutely no reaction of the art market at the time. The market continued to go up and up, speculation went up, and there was not even a thrill of anything about the art market. There was no connection. Now, it's absolutely not the case.
I think that, even though this is interesting, I think that we should also not forget that the market, as we think about it, is not necessarily uniform. And I'm going to draw another parallel to demonstrate the point. At the end of the day, as coarse as this sounds, we are talking potentially, maybe not always the case, but as an object. And I think that an object, you actually also can be very interested in 17th century French furniture. And there's a market for it. For a lot of people, it's completely irrelevant. But for people who are really interested in that topic, it's very relevant, and they will really, pay prices that a normal person wouldn't really understand why it has to be that price. And I think in the art market, we actually put everyone into the same bucket. But the market makers and where the volatility of financial markets come are not always the same. In the late 80s, there were reasons for tax and other things that Japanese were quite big in it. And so I think that when we are looking into these sorts of situations, it's very easy to come up with numbers that can say something where it is not the truth. And I believe that, one of the major phenomena in the financial markets, even between financial markets assets, the correlation of certain things are defying what happened in the 80s. So what we are seeing is that there is a disconnect with introduction of technology, with amassing of wealth of different sectors. Things have fundamentally changed. And I can tell you the biggest change of that is the rise of the new middle class of emerging markets. When that came into play, a lot of links that we take it as a given in the US and Western Europe has got disconnected. And I think we took a long time to really understand that disconnect. And I think we actually had many new entrants into the market per se, and we kind of didn't quite expect that or prepare for it. And I think it is now much more prevalent and observable, but back then it wasn't. And I think it has something to do with this as well.
I totally agree with Bilge. So, Andrew, to answer to your questions, no, I don't believe that art is an investment asset. So I totally agree with UBS on that point. Totally agree with what Bilge is saying as well in something incredibly important. What is annoying me enormously as a finance person in the art world is how limited the vision of the art people are. The commentator, and I'm sorry, journalists should work a little bit harder in broadening their views, I'm sorry to say, even if I love you, what you're writing. But it's definitely a big problem. And Bilge is extremely right to say that if you take a broader vision, it's not about Perrotin, Gagosian, Zwirner, Simchovitz, Art Rank. It's not about all this. It's about movements like she described, the fact that there is an expansion of wealth. I'll give you another example as well. It is true, like Nuria Rubini said it, that there is quite a lot in the higher level, and I hope we won't speak about the tens of millions of dollars of work of art, because it is not what we are interested in. Let's speak about the real thing. And there's many things to see. But if we're talking about the high level of the art market, of course there is money laundering. Of course there is manipulation. Of course there is tax situation. And I really like comments that are saying for example, people start in the art world to realize that there is the famous 1031 provision in the US tax law. Nobody here probably knows 1031 is, and Andrew didn't know a month ago. But it's a very important element which allows someone to sell a $100 million Picasso and buy maybe 100 works for 1 million, and he doesn't pay a capital gain tax. It's a very strong incentive to keep buying art. And if it was changed, I think it could have a serious impact on prices, whether the stock exchange is going up or down or whether anything. Another problem, Freeport. After the Bouvier case, which is a very big story that should deserve more attention. The authorities of Switzerland are a little bit embarrassed because they own still 83% of the Freeport. The Freeport was invented by the Swiss in 1854, and it was just to make it easier to do commerce. It was supposed to, rather than entering Switzerland, paying the customs and so on, and leaving a few days later, you were leaving it in a Freeport. So it was a question of going in and out. Today, 40% of the goods maintained in the Freeport are cultural goods. And they stay there, and there is exhibition space. And come on, it's got nothing to do with the original thing. The only advantage that it is to maintain art in a kind of a no man's land where, I give you a simple example how it could work is that I own a Picasso for $10 million. And in fact, I'm living in Iraq, and this Picasso is in the Freeport, and I want to sell it to Bilge, who is in Istanbul, and she managed to pay me something on the account in the Cayman Islands. And the only thing that I do is I give a phone call to transfer my Picasso from my little booth at the Freeport to her little booth in the Freeport. And that's as easy as this. So those elements are certainly elements that should be. It's not about Nate Lohman being hot. It's not about Ito Parker, Simchovitz suddenly wearing a new short on the New York Times. It is a much broader view, and I think that's something which we are able to see.
I think that it's a very interesting point that you brought up, which is that there is this expanding middle class that is getting into the art market in a very big way. And I think that, for one thing, that this is very encouraging because it creates a stability in the market where there is more resale potential for artworks, and that makes it more of a attractive place for people to put larger amounts of money. At the same time, I think that it's known that a lot of these new collectors who are getting into the market are actually coming at it from an investment perspective. The Hiscox report for online art sales that was just released recently said that 63% of new buyers who are coming into the market and who are buying art online do so primarily with an investment rationale. And what is so interesting about this expansion is that it really starts to insinuate that we're at an inflection point in the market where it's going to be less of a closed room kind of, white glove, personal, attention kind of based market, and something that can expand into a much broader kind of sphere. And I wonder what you think, what is the potential for expansion of this market, and how is that going to affect what the way that the market operates, vis-a-vis investment?
I mean, one thing is that the fact that there's a lot of interest into something and that the people ascribe financial value to it doesn't always imply that it's rational. And so from my perspective, the best example has been lived here with the tulips in Netherlands, you know. And so we believe that bulbs were something really, really valuable. And I think that, you know, human psyche is such that we actually look around, and that's just the human, you know, fight or flight. You know, we observed others escaping from something and we follow them thing. And I think we have that tendency. You know, that doesn't mean that we are not doing the right thing in terms of opening more discussion. And I think, you know, I'm hopeful, and I truly believe that, you know, even though people might think about the art market, I think that the reason why artists, especially from where I come from in Turkey, where artists are coming to forefront is not because of financial means. It's because they have fundamental problems with civil rights, you know, lots of human rights issues, women's rights issues, and those things are being actually brought up with the artist community. And if people are ascribing some value to it or are trying to participate in it, I'm going to try to take the glass half full view in terms of saying that this is actually good, because those things will mature, those ideas will mature, people will look at things differently. Whether we will have short-run market hypes like we have in every other market there was, you know, that can happen, but I think I'm much more interested what actually can happen over 10, 20-year timeframes, not in the next 3-year timeframe. And for that, I still kind of believe that, you know, we should think about this as there to stay, and more people being interested is probably a better thing. You know, whether they will be disappointed in the final. I mean, we also, you know, bought, a lot of us maybe in the room have bought internet stocks, and not everything turned out great. But yes, if you take Google away, even though they are now turning evil, if you take Google away, if you take internet away, you will find like, oh my God, how did I survive without it? And I do think that we have to look at it from the what can we accomplish with the current environment. And frankly, I ask the artists and galleries to really force this transformation to make it more of a power of voice. You know, let's not just think about the numbers here. Let's look into what content it is. And I guess the other point that I want to make is that I look into what is happening in contemporary art different than the store of value concept. The Picassos, the Rothkos, you know, they are, yes, willingly or unwillingly, if they were alive, they might have hated it or loved it or laughed at it, but they actually catapulted themselves into something else. And I am not here to judge if that was right or wrong. It is there. Lots of values ascribed to it. People use it for store of value and financial transactions. It's a means like any other financial instrument can be. I'm not here to judge that. What's much more important to me is what is happening with artists today. Because financial incentives there can create things which might not be good for the long run. And I think that's the tension here from my perspective.
Yeah, I totally agree with Bilge again. I'm sorry, Bilge, we're supposed to be confrontational, so we won't be. No, the thing is...
You can say tulips can come
Yes.
back.
It's true that it's also overdone. I mean, that thing about flipping, I'm sorry, it's an extremely marginal phenomenon. And again, I'm sorry to say, you know, the certain press is kind of happy to focus on it because those guys are noisy, are kind of, you know, bragging about super profit and so on. You know, honestly, for someone as a collector, and Bilge will agree with me, when you try to sell for the first time something, it's something of a miracle. And those guys are definitely not buying always the right way. You know, I was reading Kenny Schachter recently, who admitted that he made a very bad deal in buying or selling whatever it was in the New York Observer. Or I was hearing Jennifer Flay telling the story of Parker Ito in the U.S., where the prices went up and went down from 300,000 to 30,000. So it's very easy to say that it's easy to make money. I'm just a flipper and I'm going to do it. It's not the case. And so, yes, I totally agree with Bilge. That speculation is dangerous because it brings people like you to believe that it is possible. And to come in the art is about this. And when the real reason for coming in the art is about listening to what the artist has got to say. He's got something to express to us, and we maybe have a responsibility to preserve it for the future and the future generation. And I think that's the key element. For the rest, it remembers me a joke that I'll be very brief because normally it's pretty long, but it's about two dealers. They could be Gagosian and Zwirner that are selling each other something for $10,000, then $20,000, and then Zwirner comes back and say, "Can I buy it back from you at $30,000?" And it's go out like this until it gets to 150, and Zwirner comes back to the Gagosian and says, "Larry, can I buy you back that thing that we?" I said, "No, I sold it. Why are you selling something that was making $10,000 to each of us every day?" That's a little bit the principle, is that people are buying and selling among themselves, but who cares? I mean, really, who cares?
Well,
Yes, I just wanted to say that, the market and the art market can be the best thing and the worst thing. The worst thing for the moment is that, in fact, you have fewer and fewer artists on the market, on the real market. When you see the latest auctions, you had 10 artists making 42% of the value of the auctions, which is a bit absurd. It means that people are focused on like 20 artists or 100 artists, while there are tens of thousands of artists. It means that the market narrows the number of artists and also the interest of the people to a very little amount of artists. And the rest can be a little bit forgotten. That is the worst part of the market. The best part of the market is that because the market is such, so making millions and having really rolling with numbers, there is an interest of the people for the market and for the artist. Why do you pay so much for a Jeff Koons? And then people start thinking about, why is that artist so valuable? And then, of course, they cannot play in the court of the people who buy Jeff Koons because they don't have the money to buy a Jeff Koons. So they go to other galleries and so on. And they also want to know about art and the artists. But there is, and I will finish with that, but there is a little hypocrisy about all this, because even the curator of the Deutsche Bank fund, or the Deutsche Bank collection, I'm sorry, they say, she says, we are not buying art for investment, but we are not buying art for not investment. It means that there is always that when you buy a work of art, you always want to make a little profit of it. And it's human.
Well, I think it's important to point out that the 10 artists that you said were really, commanding the auction market. That's driven by considerations of value. There are tens of, hundreds of thousands of artists who are proliferating around the globe right now, and who are actually who are playing a greater and greater part in the culture and being able to support themselves through, to a lesser extent, of course. But I think that what's very interesting is with this growth of the art, of the art scene and artist populations from city to city, one thing that is necessary for a collector who really wants to be able to keep track of emerging art developments around the world is a kind of a model that you can apply, because there's no way that anybody can keep track of all of the emerging markets and all of the emerging art scenes around the world. And I think that you had a model that you were working on in the 90s that was a ranking model that was trying to use objective data to kind of create a more crystallized picture of the best of these artists. Could you talk about that a little bit?
Well, in fact, I started to make a model know what were the different criteria that make the value of a work of art or the potential, the investment potential of an artist. And it happens to be a very complicated model. It's some 80 different criteria that I weighted. Alain was talking about, for example, an artist who's represented by a number of galleries. But who are those galleries? What is the number? Are they international galleries? Who they exhibit also, etc. So the model is very complicated, and it's sometimes quite impossible to manage because it's too complicated. So I think that this model ended up with, in the 1990s and the beginning of the years 2000, a lot of other models, much less complicated, appeared on the market to try to have, like in the financial sector, to have algorithmic calculations. So it was not an analysis of the production of the artist, but very narrow range of criteria, which were financial criteria and some very limited criteria to achieve algorithmic predictions about the market. And that flourishes now. You have them in numbers everywhere. And I think, after having thought about it, I think it is absurd, because it's like in the financial sector, in which you have algorithms that buys and sells bonds totally, no human ever intervene in that in the market. It makes it's machines that make it, and it can. In my opinion, I'm not an expert in finance, but I think it can harm the market very much, as well as the art market is harmed by those algorithms that predict and it certainly narrows the number of artists, because only a few of those artists can be algorithmized. I don't know how, or you could invent a word to say that.
I do agree with this whole thing in terms of, trying to come up with an all-encompassing methodology to understand pricing is completely absurd. If we are going to get there, it's not going to happen in our lifetimes. I feel very confident about. And part of it is that, yes, the parameters, because if you actually buy a financial instrument you buy because of its future cash flows. If you buy a stock, if you buy a bond, it's because of the future generation of cash. When you buy an art, you have actually an obligation to store it, to take care of it. It's a completely reverse picture of it. And I also feel that, when you actually buy, if you buy a stock or a bond, by and large, most people would say it might be a good thing in terms of a financial profile, but it doesn't necessarily owning it gives you great pleasure. Whereas, art gives you that thing in terms of, if you're really truly enjoying it, something else. So it's something that just it can never be a financial instrument. It's always going to be a quasi-financial instrument. And because it's a quasi-financial instrument, we are always going to have metrics that are not going to be easily capturable, assigned to it. And, therefore, from my perspective, yes, maybe there are 10 or 20 artists, whatever the number is, that have gone into the other spectrum long enough that you could say maybe you can come up with some things to assign value to it. But what's going to happen in 90% of the art world is about what will happen in the future, especially for living artists who have not, who are only on the first chapter of a book, and you don't know how the book is going to end. So, how do you make that assessment? I think that's, for me, the disconnect in terms of looking at it as a financial instrument.
Yes, I disagree with Bilge. I give you just an example. I was here at Art Basel. I was on a booth on second floor, and I was looking at the hoods of Richard Prince, and that hood was $2.75 million. I went to the booth of Stadius Ropac, and I was looking at a wonderful Borealis on copper by Robert Rauschenberg, and it was $1.1 million. So I found interesting I would love to have a kind of a mapping because for me it's very obvious, because I know that the biography and the importance in art history of Robert Rauschenberg is vastly superior of Richard Prince, even if I like the work of Richard Prince very much. But for me, there's no comparison, and certainly neither. So intuitively, I would say to myself, wow, look at this. This something that doesn't work. I would love someone, a serious independent researcher to kind of map me the reality. It's not giving me a model of saying buying and selling, but I would love to have someone mapping me, taking into account the biography of Rauschenberg. First of all, I am trying to acquire more Rauschenberg because, in my opinion, he's a fantastically great artist, and it is still something that you can kind of afford. Some can afford anyway, and but it's the same with young artists. I know some artists that are coming out of biennales, or they have a fantastic biography already. I would say, for example, even someone like Nina Bayer, a very emerging artist. But you would compare a biography and what she's doing, who likes her, and so on, and you would kind of have a map. Does it mean that it makes it a financial investment? No. Would it mean that it's bringing attention to some artists which are interesting, because it's another way of expressing it? Yes, I would like to bring attention to some artists that are underrated by the market. Sometimes it's very interesting, and I was reading your interview of that Atran guy this morning. What is interesting is that Nina Bayer is mostly doing installation and sculptures, and the people right now, they want to buy paintings. The same with another artist I own, who's called Julia Doltz. The painting absolutely with no interest, but they tripled the price of the sculptures, which are much more interesting, because there's few demand for the market. So we're coming back to the fundamentals of buying and selling, or offer and demands on that level, which explain why discrepancy could be. But to disagree very nicely with my dear Bilge. Yes, I would think it would be very useful to do a proper job of mapping the reality, just bringing attention to extreme discrepancies. Richard Tuttle, Robert Rauschenberg, Frank Stella a few years ago, and certainly today in a lot of young artists. So who's up to it?
Well, I think it's very interesting to consider that kind of mapping model, because in that interview with Carlos Rivera from ArtRank, it's fascinating to look at what he's doing there, because he's drawing from a lot of existing metrics that were available to Etienne back in the day, but also adding in a little bit of the magic of social media. So he's analyzing some data from social media, some data from Google search results, and compiling something that's akin to a picture of interest, of global, of the moment interest in particular artists. And what you get from crunching down this data, and what you get from looking at his results on ArtRank, where every artist is separated into categories of buy now, sell now, liquidate, is that you get a very homogeneous picture of art. You get a picture that is vastly predominantly male. It's all young. It's almost 99% white, and it's all painting, and it's all abstract, and it's all decorative. So what you're doing there, and what's interesting about it is that this model only applies to that instant that you're looking at the rankings, because this is not intended to be a picture of where these artists are going to go 10 years from then. Maybe one of them is going to be the next Picasso, but that's not figured in. It's just how much money you can conceivably get based on these indicators of interest in the market from selling that artist right at that moment. And that's a very dystopian picture of art, that you have something that it ignores a lot of the artists that you're talking about, who are really in need of support from a grassroots level. And it definitely doesn't take in installation art, because it's unwieldy. You need to have space for it. You need to have the ability to commit to holding on to something like that. So I wonder, do you think that there is any utility that this kind of data could be used in terms of supporting artists who are who deserve support, or really giving people a leg up, who are looking for it, or is it only going to be talking about the hottest money, fastest money artists of the moment?
I guess it depends. I've always been interested in art, partly because I recognized I have a slight disease for comprehension, so I kind of need to understand everything about something in my job, in finance. And I actually was the one place that I could let go, and some people in the crowd who know me know this, that I actually could let go of that, because it's so ever-changing. The meanings of artworks that were made 50 years ago come back to light because of something else that happens. We see some recurring themes, but the recurring themes happen in very different circumstances and timelines. So for me, it was much more liberating that I didn't have the comprehension. So if you ask me, if you are making a decision, how do you make that decision? I don't make the decision based on a ranking per se. I just say, these are the 5 pieces that I really like. And which of the 5 pieces, if I eliminate, I'm going to have a heartache. I think that somehow my collection will suffer, not having had that piece. And, of course, in today's ever-rising art prices, which one is the affordable that I should make the right trade-off? And I think it is relative to those 5 or 6 things that I'm considering. It's not relative to the things that I can consider. It's just too long of a list for me to have that picture. And frankly, if I get into that, I feel like I will be not making any good decision, because, the parameters I need to really digest and understand is probably going to be just too, it's just not deep thinking enough, that I rather feel that I have thought and felt that my choice was the right choice. So,
a brief comment about this. Modeling is sometimes one of those, certainly in arts, which is kind of a dirty word in many ways. But it's like, models have been saving lives. I mean, weather forecast, fishermen, and things like that. So as we know it in finance, any model is only as good as the one using it. That's the key point. If you want to abuse a model, you will abuse it. If you want to use it for the good purpose, you will use it for a good purpose. So it applies in the same way.
One thing that a model can teach you is also that you sometimes ask the wrong questions. You said, what is the model going to tell you about the future of that artist? What will that artist be in the market in 10 years? I think it's a very wrong question. A good model should tell you to look back in the past and look into the artist as what was he doing 10 years from now, 10 years ago, or 20 years ago? How was the artist in that market cycle? Did he survive a market cycle to the other, etc.? And then you start realizing that instead of asking the question, what will he be in 10 years' time now? It says, what is his past? How did he evolve? And then instead of having figures about investment, you have how an artist evolved in his artistic career, about the quality of art. And then the right question should be, and you were wondering about mapping, but you were asking about the quality of Rauschenberg, or this is how did he evolve in time, in the history of art?
This reminds me of, I was at the Balenciaga Museum, if I pronounced that even remotely correctly. And there was a documentary about his fashion, and one of his fellow fashion designers was saying that fashion is beautiful today, but it's ugly tomorrow, and art is ugly today, but it's beautiful tomorrow. And what I think is interesting from a financial point of view is that the market gravitates to that art very frequently that was seen as ugly in the present moment. That is too difficult, that was groundbreaking, that was the cubism of its era. Whatever the cubism of that era, of our era is going to be vastly more valuable, even from looking at it from a financial perspective, regardless of its aesthetic value, in the future. And it's going to be something that is totally alienating at the present moment. So this brings us to the issue of connoisseurship. Connoisseurship. And I think that we, as a closing question before we open up to questions from the audience, is how do you see your experience in the financial sector inspiring or informing your views in terms of connoisseurship?
It's about your own time and dedication to a topic. I mean, in collector space, we bring collectors from very, very different backgrounds and actually interests together. And I think that if myself and my husband learned anything through that experience, is basically we got to appreciate people's commitment to something. In one case, it was actually, as opposed to what you said about male artists, one of our, dear friends and collector collaborators actually collects female artists only. Another one was very interested into ephemeral works and things that were much more performance related that most people cannot necessarily, think about it in the same way they can think about it, and they have invested their time. It's a little bit what you put in as well. And so I think that, from my perspective, connoisseurship is about the effort that you make to make context out of something that you have tried to understand. And as it comes to aesthetics, I guess, my thing about aesthetics with art is that, the world changes. It always has. It will probably continue to do so. And I think that, it's about pushing the boundaries and figuring out how future can be. And if art is one of the things that actually get us to think about that and understand new realities that in present time we can't, by all means. That's why I think it's such an enriching thing. So I would hope that we will foster that forward.
Yes, connoisseurship comes from, and it's a little bit similar to what we do, because the finance is a lot of intuition. It's not an exact science. So a lot of work, enormous absorption of information. It really, when I speak large amount of information, I know the kind of number of pages that Bilge must absorb every day, and that I absorb every day. It's like a natural way of living. From there, you create some discipline in the way of thinking. I won't get into full details, but definitely one question I ask myself before making any decision of buying a work of art is, do I stand a chance that someone will want to look at this work in 30 years? Okay, because sometimes I'm attracted to something, I say, I like it, it pleases me. And then I'm asking that question because, of course, I can like many things. But if I buy everything I like, I'm bankrupt in 2 seconds, and I'm with my hat in front of the Art Basel things outside. So it's really a question of asking that question to make those decisions, because it depends what collectors want to do. But what I want is to preserve some works of art for the future generation. It's a little bit what I want to do. So hard work, discipline from that point of view, and also intuition, is that beginning to trust your intuition, which is coming from the rest. It's like, being good in finance is kind of nourishing your intuition with a lot of information. And at the end of the day, it appears easier to make that decision of investments and that experience. And I just finished with that, with one example that was really enlightening for me at the time. Is I was looking at a show in the Musée d'Orsay in Paris. It was an amazing show. It was about the Durand-Ruel. What they did is that they went to the accounting of Durand-Ruel, and they brought works that sold very expensively, and some works like the Monet, Manet, Gauguin, and everything. And what was interesting is that under every name, there was the name, the description, but also the price that it was sold at the time. What is still stunning is that there was, a lot of usual beautiful paintings. That means what it was, a lake with a bark on it and a nice sunset. And this thing was selling for 100 French francs at the time, when the Gauguin that was sold in the back room was selling for 50 francs. And then, it was very interesting to see the kind of, I'm sorry to say, the kind of shit that was sold at the time for very, very high price. So I'm sorry to say that most of what has been sold here in this excellent fair will still be shit. And the one that is, the one that will stay will be probably the one, the one that didn't sell. So, go back and ask the list of what didn't sell when you come on Monday.
I'm sorry. I like that intuition part because I have always worked like that, and I have worked years and years on the market. But what now I realize that the market is bringing me back to art, and with intuition. And when I look back into my collection and see the pieces which are the most valuable now, when I bought them, I didn't buy them ever thinking they were going to make more money. I was just thrilled because I thought they were masterpieces. And I think in the end, we should deal with art as masterpieces. We want masterpieces, and if they are real masterpieces, they will be eventually worth millions.
Thank you very much. So is there anybody in the audience who has a question for our distinguished panelists? I can't really see anything anyway, so I think I see is there a microphone?
I'm the son of parents who used to make an art magazine in the 60s and 70s, and so I'm following the art market since a couple of decades. Do you think that an artist who starts right now will ever get the chance to become as famous and as valuable as a Picasso?
I have no background at art history, so I realized when I started, I said, if I don't want to make mistakes, I'm going to go into art history. So I followed 1 year of course at an art school in Brussels, 2 hours a day on a Thursday. What was interesting is that it took him from September to March to get from 1900 to 1960. Because things were quite linear at the time. After the 1960s, everything starts to split up. And in a way, it's also fitting because I remember my first television, there were 5 channels, and now there was 100. So in your question about the fact that would there ever be like masterpieces like the past, probably not, because there is a kind of disaggregation of the interest. There are many things that are of interest to different people. And so even if the price that they are reached for very expensive artists is still very high today, I think we're living in a totally different things where the personal interest is split up. After 1968, the famous revolution in France and across the world, it was the me situation. When before everything was more codified. So there was one lane, one art history, and suddenly after 1968, suddenly the art history is going in multiple directions. It can be minimalism, it can be arte povera, it can be anything, but it's going in all directions. So I don't think we're going to get there, if it's an answer to your question.
Yes, it is. Thank
you. Hello, I have a question. Part of the problem we have in the art market is that we have incomplete information about what happens in the private sector of the market. Much of what we read about from economists and from analysts is information that comes out of the public market, the auction market. Can you speak about information in the private market and the limitations on analysis?
It is indeed very difficult to have information about the exact figures of the market, even the first market of the market of the galleries. Much more, of course, about the secondary market between dealers. But what we could say is that those figures certainly match the evolution of the market at the auctions. So it follows, in fact, it follows the trends. So when you have a high buyer's market with a high speculation, etc., the secondary market, even the primary market, follows the same trend. It is, of course, difficult to say exactly how much and what is being sold. But eventually, a lot of those works end up again on the market of the auctions. So I think it follows the trends, and that's why, in fact, analyzing the moment of the market is very important in terms of knowing what you pay for art and if it's going to be an investment.
As a source of information, from my experience in finance again, you know, sometimes I was head of my trading, and sometimes I was getting a ticket like for a kind of a fine, something that was not paid, and I needed to sign. It was maybe sometimes $100 or nothing. So there's two solutions. I say I sign in because I don't care for 100, or I'm digging because it means that there is a problem. If my settlement was not achieved, it means that there was a problem in my organization. So if you apply the same thing to the art world, a fantastic source of information about what you say is not visible are the court notes. You know, any lawsuit that there is, look at it, because you know, if you do the list of every lawsuit that have been happening in the last 10 years, if you dig into them, you get massive information about what exactly is happening. I mean, whether it's Gagosian against Perelman, whether it's Gagosian against Coles, whether it's Ito against New Gallery. I mean, try to get the information from the courtyard notes, and suddenly you get some insight about what's going on in the art markets. That will certainly help you.
Well, I believe that's all the time we have. So thank you very much. Thank you very much for joining me. And thanks.